Hello, everybody. How's everybody doing? 26 of you. I don't know why I got a lot last time too, live. I don't know what the deal is. If somebody's, I don't understand. Usually I get like 6 to 8 or 10, maybe. 29 people is a lot of people. You guys all here to see me cry over all my stock losses? Anyway, how is everybody? How is everyone? Cheers. Let's pour myself a glass of wine. I see some funny comments here. Skylarker, Matt, you have to buy like 2 ETH here or whatever. It's down 80%. You tweeted at the 2020 low. You should. You didn't. You should put in a toe here. I know you won't, but you should. Cheers and good luck. I don't necessarily disagree that that Bitcoin and Ether probably go up from here. Just not my thing, you know. And in fact, if anything, it's proven that they're just risk correlated assets. So I could buy Ether, I could buy Bitcoin, I could buy ARK. Clearly, I can't buy MagnaChip. That's not correlated with going up ever. But I don't necessarily disagree with you that they could or they should work from here. Quaking violently about this debacle. Clown pick should be puddles, just saying. Hey, all right. So I don't even know where to begin with this. Obviously, the last week and a half has been absolutely brutal for me. I went from being up for the year on the day the Fed raised to being down 40% for the year through Friday. Bad. And I've rebounded today a little bit. So what, I'm only down like probably 35% for the year now. Bad. And, that's what happens. I have a lot of leverage. Most of my leverage is in MagnaChip call spreads. And since they're so big that I'm moving MagnaChip from 20 to 16, I think those call spreads, the amount of money I had exposed in call spreads was like 200 basis points, 2,000 basis points, excuse me. So 20% of my equity was in MagnaChip call spreads. And then that fell to, 10% of my equity. So right there alone, I lost, 10% of my portfolio just on the MagnaChip call spreads. And then Zendesk was a huge debacle, which I have no one to blame for myself, of course, especially when I was skeptical that they'd be able to pull off a deal in this environment. I still was short puts against my old call spreads and ended up taking a huge loss. I still own a very small amount of common now, but I'm not constructive on Zendesk, and there's no reason for me to own any of it right now, but I do. It's small. So that was a huge loser. And then BSM and AMPY both came in at huge, and those were my winners. And it's been a disaster. It's been a disaster. But what have I done? So I guess we should go by name. But basically, since I use leverage, I have to de-risk, and I usually always de-risk at the lows or near the lows, or I'm never really in a position to play offense. So just how it always works in my portfolio, because that's what happens when you use leverage. And I didn't sell any BSM. I've made SHLX bigger, and I made Twitter a little bit smaller. And with Kohl's, I don't know why I'm going out of order here, but with Kohl's, I'm much, much smaller in it. I basically just have some July call spreads. It's about 100 basis point position. And I guess let's just go one by one. So let's start with MagnaChip. I'll go in order of position size. So MagnaChip, as you guys have seen probably today, it was down below 16 at one point, and now it's 1673. A lot of people are wondering why. I tweeted this weekend that I thought that, the odds of a deal are significantly lower than they once were. They might be 25% that we get a deal in the next 6 weeks or something like that. Before I was at 75 or 80%. And there's a multitude of reasons here, right? The South Korean stock market is at 52-week lows. LX Semi is at 52-week lows. Samsung's at 52-week lows. No deals are happening really outside of biotech strategic And obviously there's no LBOs happening. This wouldn't be an LBO, but this would be a big deal for LX. This is not some small rounding error strategic thing that they need. And, finally you had last week Samsung, an article came out on Samsung that said that they are cutting orders from suppliers, and MagnaChip's, over half of MagnaChip's business is Samsung. Now, it doesn't mean that they're going to cut MagnaChip's business, but that obviously isn't good, right? And then somebody else who mentioned to me that SHLX, I think is the name of the company, they warned today, and they're kind of a competitor of MagnaChip. So where does that leave us here? Well, obviously, from a short-term perspective, it really sucks. I have no idea what this is going to do to MagnaChip's business in the short term. They've always been capacity constrained, supply constrained, and I don't know what it means if they have orders cut when they can't supply the amount of demand that they've had for the last year and a half. Clearly, there should be some buffer that would allow them to continue generating the revenues they've been generating since they're so supply constrained. But is that going to be the case? I have no idea. I do think that all the reasons why LX wanted a deal at the end of April, or at the middle of May, still stand today. And there's nothing that would prohibit this deal from still happening in the next 4 to 6 weeks, except for the macro environment we're in. So it would be, it'd be wrong for me to tell you that I think that it's likely a deal happens. I don't think it's likely that a deal happens. But we're at 1670. So, my common position's smaller. It's like a 30% common position. And I have 1,000 basis points in call spreads, basically. So, and most of that money is in Jan 23 and Jan 24 call spreads. I still own all the Septembers, but they've gotten decimated. And I have very small July. My June expire worthless, but those weren't very big in the first place. I don't really know what else to say, except, my expectations are low, sadly. And it's obviously really depressing. I mean, if everything was pushed out a month, they probably would have got the deal done, because they probably need another 4 weeks from where the market started imploding 10 days ago, and they didn't get it. So again, could it still happen? Yes, but I think we should be pleasantly surprised if something happens and not expect it. That's MagnaChip. I'll just go in order the size of the positions. So SHLX is my second biggest position. I've done a few YouTubes on this. I think we're really close to the end there. It's been 4.5 months or so, and or 4 months, and that's right around the time period it should take for kind of a contested minority majority takeout. And I look at it as I said, I mean, you can go watch any of the old videos about SHLX. Literally nothing's changed. So I think that my base case is that it's like 1450. That would be my base case is it's probably 1475 to 15. Okay, my bear case is it's 1425 to 1450. And then my bull case is as much as $16. And I get a dividend, a 30-cent dividend in about 6 weeks. And to me, it's just a great place to be overweight, because I don't think it's going to matter what the stock market does there. I think that it's kind of very independent what the process versus what the stock market's doing. So that's a very big position. It's like 60-something% common. It's fully marginable. And you have to have a K1 with that. So anyway, watch the old stuff if you want to learn more about that. Twitter is about a 10% common position, and then another 75 or 50 basis points in call spreads. A lot's happened there, but it's all the same bullshit. Elon Musk is saying that he cares about the spam, and Twitter's saying we don't care. I don't really think there's much to say there. I think Elon Musk did a Twitter town hall meeting where they talked to employees, didn't really move the stock. At the end of the day, two things with Twitter. First, the longer we get into the summer and you hear nothing from a regulatory standpoint, any kind of hoopla when it comes to Congress or CFIUS or anything like that, I think that's really bullish, because at the end of the day, once they get the shareholder vote, that'll basically be the last thing they need to close. And that's when you might see a price cut of like $1 or $2 or $3 or something. I don't think it's likely. I guess I'm higher now than I was in the past. So maybe I would say it's like 40% chance of a price cut, 50% chance, they litigate, 10% chance of break somehow. Financing gets, the banks pull the financing or what have you. And then once you go to trial, I'm at a 90% chance it either settles or they win in court. So I still really like Twitter, but at the end of the day, it's just beta, right? It's going up and down with the market. So it's not acting like an ARB. No ARBs really are, right? They're all acting kind of with beta with the market. And that's scary to me. Kohl's. So last time I did the YouTube, I was super bullish on Kohl's, and that was like right before the market imploded. I think it was like Thursday or Friday of the Fed meeting. And then last week happened. And obviously you can't look at any deal or any process in a vacuum without seeing what's going on in the larger picture. And that heavily influenced my opinion of Kohl's, that, it's going to be much harder for them to get this deal done, obviously. The equity market's saying like a 35%, 35% chance of it happening if you assume a 35 down and a 56 up. And the option market is assuming less of a chance, like a 25% chance of it happening. If you look at the July 52-50, 55 call spreads, because it should cover that with no problem if they get a deal done. There was an article that came out in the New York Post saying that the buyer still was very enthused, wants to pay 60, but there's no financing yet. So you have two legs of the financing. You have Apollo, which is going to do the debt, and then you have the sale leaseback on all of the real estate, and both of them have their challenges in this market. I mean, is my sound bad, or is only Rosenblum saying that? Hello, Daniel. Anybody else have a problem hearing me? I can be a little bit closer. Should be any reason why the sound's not working. I assume other people would have told me that, Dan. Maybe you're just old. You need to get the wax cleaned out of your ears. Thank you, Jeremy. So I don't know what's going to happen with Kohl's. How do I look? Do I look good? You sound hot. Honestly, the Kohl situation is probably one of the more depressing special situations I've had in my entire career, because I guess I've gotten in and out of it probably 5 times in the last 2 months, losing money almost every time I've gotten in and out of it, which is really just unbelievable. And I don't know. Anyone that tells you that they know what's going to happen with that is nuts, because it's going to be hard for them to pull it off. And 20% sounds like about the right odds. So that I own the call spreads, paying me 5-1, and we'll see what happens. But I can't be overly confident about anything like that right now. Yeah. Blackstone Mineral is my 3rd largest position, which is probably like 35%. And that's been decimated, rebounding today with energy stocks, but it's trading at just an absurd valuation. I mean, their run rate dividend right now is $1.60 on a $14.50 stock. And that dividend should go up every quarter for the next 7 quarters. And there's no debt. And natural gas is still near the highs of the recent highs. It's not like it's off that much from the strip's off that much. So I continue to love BSM, ANPY. We're waiting to find out whether or not they're going to be able to restart beta. There was a newspaper article about that about a week or 10 days ago, where there were some protests. If they do restart beta, I expect that to go up significantly. If they don't, obviously it would sell off, but it's not even pricing really anything in for beta. So, but ANPY is a smaller position now. It's like a 5% position. Something that I think I talked about in the past that I owned, but I had to sell it for margin, was ARDX. I'm not sure I talked about it or not. It's a penny biotech stock that had a lead drug that the FDA CRL'd last year, and they announced a couple months ago that their appeal was somewhat successful, to where the FDA said they would hold an AdCom for that drug and then make a decision within 30 days after the AdCom. The stock popped to like $1 and now has gone all the way back down to where it was before that. Today they announced the AdCom date, which is in November. I'll have a lot more to say about that in the coming months, but I'm very constructive on that AdCom and the odds of the AdCom voting for approval of the drug. And I've structured that position with call spreads, January 23 and January 24. And you could put on things like $1.50, $3 call spreads for 10 cents. So you'll make 15 times your money if it goes to $3. And that's Jan 24. So it gives you all sorts of time for them to get approval to sell the company, whatever. And I like Common too, but I haven't put it back on yet. I'll do probably a whole YouTube on that in the coming months into that event. Your risk there is that they have a money shortage problem, and they hit the ATM pretty much anytime the stock pops. So it wasn't even up today because they probably had hit the ATM the whole day today, and that's not good. So I guess I don't think we're in any rush there because they're going to raise money anytime it goes up. I think that's about it, guys. I really just wanted to catch everybody up on Kohl's, on MagnaChip, on SHLX, and on Twitter for the most part. I'll take any questions if you guys have any. But look, I know a lot of people are probably hurting. I lost a lot of money. And it sucks. And it's not the first time, and it won't be the last time. And I hate it. I hate having to play defense, and I hate having to sell stocks. And I don't have any income other than this. So this is for you home gamers that do this too as a full-time source of income. You need to manage the portfolio as like it's gold or Bitcoin, if you will. Do you rent or own? I do own my house. That's the only other form of net worth. My house, and I have most of it paid off. So it's my house, my BMYRT, my CVR, which I don't think I've ever told anybody on here, but the CVR is so big that at $1.50, if we include it in the denominator and the numerator, if we include it in the denominator of my portfolio and then mark it at $1.50, it would be a 30-something% position in my portfolio. If you don't include in the denominator and you just use the value at $1.50, it would be a 50% position right now in my portfolio. But I guess you'd have to include in the denominator. It doesn't make any sense. So the CVR has the potential to pay off huge for me in a few years, and but it's not liquid, of course, and I don't like to think about it as a source of income or asset. And yeah, so it's been a brutal few years. I made money last year, and then now I'm down, whatever, the 35% year to date. I lost some money in 2000, most because of the CVR, and then 2019 I was down too. Now before that, I was doing amazing. 2018, 17, 16, 15, 14, 13, 12, whatever. I don't think I even had a down year since I started in 2008 until 2019 hit. So yeah, every day is just a new day, and I got to do the best I can do, So it's been really depressing. You're not the only one out there. Plenty of people lose money. They just don't like to talk about it. And it's much easier to just do victory laps. Do you want us to ship you some ramen noodles? Now, I can still feed the family. I think we're okay. I can still feed the family. The hardest part about drawdowns and people that don't do this for a living, most of you would get it. I'll get it. It's really not so much the loss of the day, which is, sometimes huge. I lost last week alone on 2 different days. I lost between 15 and 20% of the portfolio on Monday and Thursday, I think. 2 different days in the same week. And the hard part isn't really about the losses of today, it's the losses of tomorrow, right? You never know what the next day is going to bring and whether you have to sell or draw down or sell or cut risk or whatever. And that's the part I think most people don't get. It's if you told me that the losses are over now, then, you know, I could always move forward, but you have to make sure you don't take another 35% loss in the portfolio. So anyway, tell us some home run investments from 2012, 2018. I mean, my best 2 investments ever were, which would have been so much fun to do it on YouTube back in the day. It would have been so much fun. Was when DMVT was getting hostilely acquired from Michael Dell. And SRPT, that's true too. I could have done SRPT. Can you imagine SRPT YouTubes? Oh my God, that would have been something. I could have done SRPT YouTube every week. But the DMVT spinoff stock that Michael Dell was trying to acquire and ended up acquiring, that was like all sorts of game theory. And I think I played it just perfectly. I mean, when it was going on, I thought I played it perfectly all the way through the acquisition of it when I made it gigantic into the close, because I thought that people wouldn't elect cash and they would automatically get stock, which would mean I would get an overly pro rata share of cash. And I did. And I made like 150 basis points just on that day from being oversized and in the election. But the coolest part about this is because I was so big in DMVT at the close, I now have the equivalent, this is no joke, the equivalent of a 300% position in DMVT at the close, which is currently deep in a lawsuit with Michael Dell and Silver Lake, and it's going to go to trial at the end of this year. So it's already passed, you know, all sorts of hurdles. And the guy that's overseeing the trial is a real ball buster. And I think that they could win a lot of money. You know, I think that they could possibly get as much as a $10 to $30 bump from the close that day of $105. And obviously a $10 bump would be something like a 35% gain on my portfolio today if that happened. So I think that's pretty cool. Do you ever wish you could just hold, i.e. not own expiring securities? That's what usually shows me up to options. Look, you know, the call spread, sometimes they work, sometimes they don't work. It's the reason why I'm so big in the options is that allows me to have the leverage that's defined. It's a defined amount of leverage, right? I could never have actually made MagnaChip 100% position. I just couldn't have done it. I couldn't have done it from a margin perspective, and I couldn't have done it from a risk perspective. But I was able to make it 100% delta adjusted position because I was so big in the call spreads. And to mitigate that, I try to make them, you know, more long dated, right? With MagnaChip in particular, I don't care that, you know, the risk of long dated call spreads is they need to stay above the top end of your call spread for a longer period of time. If it happens, let's say MagnaChip went to $26, you know, in October, it won't. Well, what if it got sold, I guess? You're then stuck on owning this thing for another year and a half. The best example of how this screwed me was with Groupon, right? I owned a ton of Groupon Jan 2030 call spreads and Jan 2535 call spreads for the January that just expired. And I bought them in July of 2020. Excuse me. So I had 15 months or 16 months of time or 18 months of time. And that was great until Groupon went to 60 in February of 2021. But I still had another 10 months left to get to expiration. And I was cocky and I thought there was no way Groupon would ever go back to 35 or 30. So I just left them on. And at that point, the mark to market, they're worth like $8. So I was basically short a put spread for, you know, I was short a 35-25 put spread for $2. And guess what? Groupon went all the way back down. And I lost a huge amount of money on those call spreads, first being all in the money and then being worthless. So, you know, it happens. I can explain what delta adjusted means. It's really not that complicated. So let's start with stock. So when you own a share of stock, one share, you have a delta of 1 on that position. Let's say you own 100 shares of stock. It's a 100 delta position, right? So all that means is if the stock goes up $1, you're going to make $100. If the stock goes down $1, you're going to lose $100, right? And it's always going to be a 100 delta position, okay? With options, all that it means is when I put on an option, either a call or a put or a spread or whatever, the delta adjusted position, it's a numerical thing that you can get from Interactive Brokers will give it to you, but you can also see it based on what the option price is and what the underlying implied vol is of the option. These are all facts, so it's not subjective. That you figure out the computer figures out what the underlying vol is of the option based on what it's priced at versus how much time is left, what interest rates are, and what the stock price is. So when I say I have 100% delta adjusted MagnaChip position, it means exactly what it sounds like. If MagnaChip goes up $1, I have the equivalent of 100% stock position on MagnaChip. So I will make, whatever the equivalent. Let's not use dollars. Let's use percentages. If MagnaChip goes up 10%, then my portfolio will go up 10%. Now that's not entirely true because there's something else called gamma. And what gamma is it's as the stock moves, your options position changes, right? If you're long gamma, when the stock goes up or goes down, as it goes up, the position gets bigger, and as it goes down, your position gets smaller. If you're short gamma, it's the opposite. Position goes up, your position gets smaller. If the stock goes down, your position gets larger. The best way to explain gamma would be when you short options. So if I'm short calls and short puts, right, I'm going to be short gamma, I think. And well, if I'm short calls, I'm going to be short gamma because as the stock goes up, I'm going to get a smaller position. If I'm long calls, I'm going to be long gamma because as the stock goes up, that call is going to be worth more and more money. Anyway, I don't know where the hell I'm going with this, but that's what gamma is. I mean, that's what delta adjusted means. Which idea got you VIC membership? I actually didn't. The VIC membership goes back to way back when I had a hedge fund with a couple guys, and one of my partners at the time wrote up the idea, and that's how we got VIC membership. It had nothing to do with me. And then when the hedge fund failed or closed and failed, it's a long story, but the membership was under my name, and the membership expired, and then I reapplied to get reactivated under my own name, under my own idea. And I got accepted with the reactivation, which I don't remember what stock that was. Where do you source your ideas from? Stock screeners, Twitter. I mostly get my ideas from looking at news flow, and then I like to be my own referral for things. Generally speaking, when I get pitch stuff or if I take something from Vic and I buy it, I lose money. It's almost a certainty. And I don't know why that is. I guess I just jump into the most crowded, sexiest ideas that people, can sell me on. So I can go through each of these names of how I've found them over time, but they're not terribly interesting. With Twitter, of course, you don't have to have gotten that pitched by anybody. I just was watching it, never owned it after the deal was announced, saw it go down, saw it keep going down, and it didn't get involved in it until it was whatever, 37 or 36. All the others, SHLX actually was Andrew Walker DM'd me, asked me if I looked at it, just asked if I looked at it. And then I happened to notice on Vic, people were talking about it. And then I read the Vic thread on it, and then I immediately loved it. And did my own work on it, and just fell in love with it. Blackstone Mineral was a Vic name, and there's tons of work that was done on Vic on it. So that's how I got involved there. MagnaChip goes back years. years. I can't even tell you how I first learned about it, but I've just known that stock for years and been involved off and on over time. AMPY was a Vic name. Got destroyed on it. It went from like 8 to under $1. Zendesk, a friend of mine mentioned it in February to me that he thought it was interesting that Jana would win the proxy, the deal would get voted down, and then there would be some action there. And then when the private equity consortium bid 127 to 133, that's when I started buying it. So, a lot of these things would have turned out differently if there wasn't the disastrous macro outcome of the last few months. But look, that's part of investing. I should have pivoted knowing that there was no way they'd be able to get the deal done. And I had an inclination of that. That's why I sold so much of it at 130 when they announced they hired, when that article leaked that they had Catalyst partners and there was nothing in the article. I should have got out of all of it, but I didn't. And then I sold puts. I was short puts on it. So, I have no one. Look, it's hard. It's harder to sell than it is to buy. Who are your favorite famous investors? I don't really have any. I think all those guys are more talented than me. I have a very unique skill set that's very niche. I'm probably terrible at portfolio management. I'm terrible at calculating risk. And those are probably the things that are most important as an investor. And that's what I'm the worst at. So all the guys that have really been successful know how to do those things exceptionally well. And I'm still learning, I guess, after 15 years of doing this on my own, that I need to size things smaller, and I need to be prepared for the tail risk that seems to come every 2 years. I guess I thought after COVID, that was our tail risk for the next 5 or 10 years. I didn't think the market would go down 50% or something like that. And it could still go down, another 20, 25% from here. I don't think that's likely, but it could. It definitely could. All right. Any other questions? Thanks for everybody for coming out. 34 people. Anyway, I'm feeling bad. It's amazing what one day of making money will do for you. Even with MagnaChip being down, it's just the relentless punching, 1-2 punch left and right for the last 7 days has just been absolutely brutal. And what I really want is just one event to happen my way. I know SHLX. I'm so confident SHLX will be that event. I just don't know when that's going to happen. It could happen in a week. It could happen in a month. It could happen in 2 months. I might also not make a lot of money on it, but I just want that to happen. I could de-risk it. Why is Rev tripled since bankruptcy announcement? I mean, this is someone was talking about this the other day. It's not terribly unheard of for retail investors to pile into these things after they declare bankruptcy. I've seen it before years ago with American Airlines when it went bankrupt back, in 2006, 2007, Delta. I think I'm referring to Delta actually. We were short that at my hedge fund after it went bankrupt. There's no good reason for it. I mean, I can assure you that the controlling shareholder there didn't file Chapter 11 if he didn't have to. And I really doubt there's going to be an equity recovery, or else he would have probably done it. We saw with Hertz. Yeah. Oh, but wait, Michael, didn't Hertz have recovery for the common? Or am I wrong? I thought that ended up, because of COVID, ended up being such a big beneficiary that the Hertz common, the equity holders did get recovery there. But I might be making that up completely. That might not be true. You don't have any allocation to an index? I only play with 1/3 for now because I'm still learning. No, everything I have is in individual stocks. I don't want to own the S&P 500 or anything like that. Is that smart? It's been smart for me since I started doing this 15 years ago. I vastly outperformed it. But the way that I invest is definitely not the way most people should invest. I say nothing's investment advice. I can tell you my investment advice to you is don't do what I do. Things you shouldn't, using leverage is very dangerous. Being so concentrated is very dangerous. There should be big disclaimers under every everybody's accounts that says don't try these kinds of things at home unless you know what you're doing, because all the things that could go wrong do go wrong. You know, we need to hear your hedge fund story someday. Yeah, maybe one day. Maybe one day. That was pretty wild times. It's a long time ago, 2006 to 2008. And I was just a kid. I was 26 years old when we launched the hedge fund. And I was 28 years old when we closed the hedge fund. So it was a long time ago. Recovery with Hertz was great because used car prices went ham. Well, there you go. I mean, so at least then when they bought the Hertz Common, there was a reason for it. It ended up being a great buy. You know, BTU also, I think, was a great one that went bankrupt, the Kohl stock, and then ended up having a huge recovery. So bankrupt stocks can have huge equity recoveries. It's just not the norm. It's very unlikely, but definitely could happen. I haven't looked at Revlon at all. I think it's probably very unlikely that Revlon has recovery, but I guess it's possible. Again, I haven't looked at it for 1 minute. All right. Oh, and AXSM, I have no idea what's going on there. I have no position in that anymore. I still think it's very likely it's approved. I have no idea what's going on there. I can't believe they haven't entered labeling discussions. I can't believe they haven't gotten a CRL. If there was going to be a CRL that was going to come, my guess is I have major FOMO and regret that I didn't own some common in some common right now into what is inevitably going to be an approval or a labeling discussion PR, but I have no risk tolerance. And also it's left the realm of making sense to me. It does not make any sense to me anymore. So there's no reason for me to play in something that is honestly incomprehensible. Oh, BTU had no recovery. I didn't. Okay, there you go. I thought there was a huge recovery there. All right. Thanks, everybody. Appreciate it. Take care. I'll be on here. Was ever any news, any of the stocks? If we hear another article on MagnaChip or something, I'll definitely come back on and I'll talk about it. But until then, let's hope we get some good news on something. All right. Take care. Thanks, everybody.